We've got Binod Modi, the senior analyst for cement at Reliance Securities, joining in. Remember, you've got ACC's numbers as well lined up today. Binoy, hi, good to Binod. I beg your pardon. Good to have you on the show with us. Tell us, what is it that you're expecting from ACC in terms of the dispatches and realizations?
ACC, of course, we are expecting, very soft kind of number, in the sense that there is definitely certain sort of, volume decline. In case of ACC, we estimated around, 3% kind of, YOY decline in terms of volume, whereas realization, if you look at realization, we expect, little bit steeper kind of realization decline in case of ACC because of its, strong presence in eastern as well as the southern market. So sequentially, we are expecting ACCs to report around 7% kind of decline in the blended realization, and that should, will basically lead to, soft kind of operational performance. So yes, as far as EBITDA is concerned, we are estimating, including other operating income, EBITDA should be around 440 to 450 crore.
Sure.
This is more or less, flat.
Okay, fair enough. What do you want to hear from the management in terms of demand outlook as well, Binod? What's your sense there? It's been weak across residential. Do you feel that any government capex can help in terms of, boosting the overall demand trend?
Of course, if you basically look at last 2 years, cement demand has been, mainly driven from, infrastructure development and the housing part, especially, PMAY part. So that these things, has, driven the demand in a very good way till last year, FY19. But if I look at last 6 months, of course, apparently there has been, kind of slowdown across the pack, be it in housing part, PMAY, or be it, government spending, it's, again slow down considerably. And again, in some kind of infrastructure part, selected infrastructure, where we have seen, because of funding issues, and of course, several projects got cancelled, land acquisition delay, and all these have, all together, taken a toll on overall cement demand. So first half, of course, it's been, more or less kind of, flattish demand for overall industry. But of course, we are very much hopeful that the second half from November onward, demand should revive, because if you look at overall, government capex expenditure till date, it's been, quite, dismal sort of. That's where we are expecting, that should pick up in the second half. Plus the kind of initiative the government has taken in last couple of months, so as to improve rural consumption, right, along with favorable monsoon so far. So these things all together, should have a positive impact from the rural consumption as well. So net we are, we are very much hopeful that the cement demand, should recover in a, better way in the second half.
Okay, so you're still expecting a better second half then. What about the pricing scenario? Any uptick that you see coming up in October? And, also just what your top picks would be in the sector right now?
Pricing, if I look at overall for the quarter, of course, pricing has been, quite dismal, though in quarter 2 we are still up by about 3 to 4% on YOY basis, though sequentially down by about 6 to 7%, right? But if you talk about October month, specifically October, I have not seen any sort of, significant spurt in pricing across the, region. Though there were some kind of, dialogues to increase the price in, a couple of regions, but yet it has not improved. But of course, I believe, post Diwali and all, post festivals, I think prices should, get a momentum. But we are not very much hopeful that the prices should, improve, 6-7% here on. But even though it improves, 1-2% or at max 3%, that should, bode well to the industry.
All right, thanks for that, Binod, and for taking us through your views with regards to cement earnings now.